that chart there and you look at Reeves' chart, do you not recognize exactly the same thing? Do you not recognize it? It's exactly the same thing, isn't it? Look, so that manipulation there, can we all agree that that manipulation there is now visible on that screen? Yes, it is, because there's the manipulation there, right? They've ran the price up to the top edge and they've manipulated the price into that liquidity there. There's a big bag of liquidity there. There's some liquidity there. And they've ran the price up really quickly. There was no value to run the price up really quickly. The value wasn't bearish at that stage, but there was no reason to run the price up quickly at that point. It just was exactly right. But they did it anyway. So they took it up and then they flipped the switch and they came in here and there's your 56 sell there, potentially your 56 sell there. You see the 56? That imbalance candle, when you broke that small short-term, a small short-term structure isn't exactly a small short-term structure. I mean, it's a pretty chunky chart that we've got on the screens here, right? That is an entire day right there. So it's not chump change structures. So now you've got a potential 56 in here because you also took out that structure there as well. So that could become a 56. If that could become a 56, that's exactly where Reeve has ended up. That's exactly where Reeve ended up getting his trade on, wasn't it? You see it? It's exactly where he got his trade on, is the 56 sell trade. May not have even realized it was the 56 sell trade because ultimately they did a manipulation there to get the trade on again. So you can see that there's a lot of that storyline built into the storyline again and again and again. And that wasn't just a manipulation, that was also a paycheck. So obviously that was your manipulation there, and then that became your 56 there, didn't it? Because of that price took out that structure, didn't it? So if that became your 56, you would then be able to highlight that as a 56 trade level. On that chart there, with that as a new 56 trade level, you then saw these pins here on this bigger time frame. You saw that manipulation there, and you could probably have actually added to your short sale right there, couldn't you? So when you see it, it's not that difficult to actually do it. Reeve is living proof that you can actually see these things and do these things as well. You know, it's not just about recognizing what's happened. So does that chart there kind of look like that chart there? Kind of, right? It kind of looks like that, doesn't it? They run it through the manipulation phase. They take the price south. They then have a 56 and a commercial sell zone, which is now this area here. That's now your commercial sell zone. You're now trying to find a way to sell into that from the 56 storyline. And now you've got the big profit, and it's in 10 contracts, it's 15 grand. Which is a great trade, absolutely brilliant. And it uses the things that we're teaching. That's the most important thing. It's not like it's something that you look at and say, I have no idea how Reeve found those two trades or those one, whatever trade it was. I've no idea how he finds these trade ideas. Well, it's a classroom we even did this morning, guys. It's a classroom we did this morning. We showed you those exact trades on oil. We showed you those exact trades in this morning's classroom. That's Reeve's sell trade there. That's Reeve's sell trade there. Well, no shit. That's exactly where they should be. That's exactly where they should be, having identified the manipulation phase in the background right there. Having identified the manipulation phase in the background right there. Having identified the manipulation phase in the background right there. That's where the sell trade should be. And that's exactly where Reeves got those trades, which is exactly why this is a very, very, very good trade. Because it takes the teachings and it does the trade in line with the teachings. And because he did the trade in line with the teachings, Reeves going to go and buy himself another island. I think he's ran out of islands. He's probably most of the Caribbean's probably now in Reeves' possession. So I mean, he's going to start running out of stuff to buy, isn't he? But you can see it's not something that you look at and say, I don't know how Reeve's done so well in those trades. Really? He just did the stuff that we teach, guys. That's all he's done. He's not done anything different. He's not done anything that's unique. He's just actually put into practice the stuff that we show. That's all. It's not a big ask. It's not a big challenge. You just put it into practice. You accept it up. And this is actually why I was going to this particular story. Do you think Reeve never had a couple of other attempts at maybe some trades somewhere else? Of course he did. The one we're showing you is the big winning trade. But Reeve might have had an attempt at maybe a sell trade there, for example, right? I don't know. Maybe Reeve had an attempt at a sell trade there. Maybe Reeve took a sell trade there. Maybe Reeve had a chance at maybe fading a bottom edge. I don't know. It doesn't make any difference is what my point is. I remember there was a guy in our syndicate. There was a guy in our syndicate, and he said, would we all mind if he gave his brother-in-law some of the horse tips that we had identified inside our horse syndicate? And none of us minded this. So long as he's not going to put big money on, so long as he's kind of going to cap his kind of the money he's going to put on it to maybe a couple of £100. I don't want to see like thousands of pounds going on the horses that we're putting thousands of pounds on, because it's going to change the price for us. So they promised that he wasn't going to put on big money. So on that basis, he started to give this guy a couple of the tips, and it was at the point, the reason why the brother-in-law wanted the tips was we just hit a big we'd hit a big threefold winner, and it paid out something like 80 to 1 odds on the threefold winner. We made a lot of money on the threefold, and the brother-in-law was like, oh my God, how come, what did you just buy? And he bought a car with the money he made. And he said to his brother-in-law, he says, well, how did you manage to buy this car? And he says, I just put the threefold on for X amount of money, and I made enough to buy the car. And he was like, my God, would you mind giving me some of those tips? And he gave him some of the tips. This is going back a few months now. He gave him some of the next few tips. He gave him like the next 5 tips. None of the next 5 tips won. None of them. They all lost money. So he gave back, maybe a 500 here, maybe gave back £1,000 there. Remember, he's sitting on something like 80 grand from his previous win. So he gives back 500, he gives back £1,000, he gives back 500, he gives back 200, he gives back £1,000, right? He's still sitting on about 77,000 of his profits at that stage. Well, he gave the brother-in-law the next 5 tips, and all 5 tips lost, and the brother-in-law was saying, this is shit. And the brother-in-law says, look, I've not made any money. This is rubbish. You don't have to bother sending me anymore because I'm not going to use them. And he says, look, I'll send you a few more, just because I don't know why you're doing that, but I'll send you a few more. The next bet that he sent was another threefold. It was worth about 70 to 1 odds. The guy was playing with about £200 a bet. So he says, right, put your £200 on this one at 70 to 1. And the 70 to 1 shot came in. The 70 to 1 shot came in. The guy had put the guy that's in the syndicate had put 500 on it, and he made himself £35,000, right? Do you know how much his brother-in-law made? Do you know how much his brother-in-law made? 0. Why did his brother-in-law make no money on the next big winner? Because he never put any money on it. He'd lost his confidence in the system. He'd lost his confidence in this. How many times do you think a 70 to 1 winner is going to happen? Is it going to happen once in every 5 times you put a 70 to 1 winner on? Do you think you're going to get a winner on every 5 times you play a 70 to 1 shot? Of course not. It's not even in the realms of probabilities that would register, is it really? That you're expecting to get a 70 to 1 winner within 5 rolls of a dice. That's not going to happen. You'll be lucky to get a 70 to 1 winner within 60 or 70 rolls of the dice, wouldn't you, right? So this guy had unreasonable expectations, didn't he? They had unreasonable expectations, and because of that, he wasn't using account sizing properly. He didn't realize that you would sometimes have to go through some crap trades to get to the good one. But then if you give up when the good one turns up and you're not in it, then you're back to the fact of now looking at a brilliant trade and saying, I better get started. And guess what happens? So what did the guy say to the brother-in-law? What did the guy say to the syndicate member? He says, going to just keep giving me the tips. And he started to put £200 back on the tips that we sent, right? The 70 to 1 tips. He put £200 back on the 70 to 1 tips. And the next 7 or 8 or 10 tips all lost. You see the problem? He keeps chasing the big win after the big wins came in. And because of that, he's not on the big win. He's now falling into that gap between the big wins, isn't he? He's falling into the gap. He's not being consistent. And because he's money management, I says, if you can't afford to run £200 bets on these, don't run £200 bets. You should be running 20 quid bets or £10 bets, so that 5 losing trades or 10 losing trades or even 20 losing trades potentially in a row is not going to bust your bank, and then you're still going to be in it when the next 70 to 1 shot comes along, right? So you've got to remember that when you're trading, this is one of the problems. You'll see Reeves' brilliant trade and you'll be reinvigorated to do that bigger trade. You'll be invigorated to do the big trade, and then all of a sudden it doesn't work for you and you say this is shit, and you stop using this process again. Because what always happens, I'll show you an algorithm and it'll make money and it'll make more money and it'll make more money. We did it on the max dispersion trades, right? So this is a great example here. 10 past 3 yesterday. 10 past 3 yesterday, we got an NQ max dispersion trade. Offer top line liquidity, guys. That was at 20,100. This actually ended up trading 19,900 at that stage, right? It ended up dropping for $4,000 per contract. So guess what's going to happen, Jack? Guess what's going to happen? You're going to look at that trade and say, that's 3 in a row that's hit massive winners, right? 3 in a row on max that's hit a massive winner. Guess what's going to happen? You'll trade the 4th one and it'll lose you 10 ticks. You won't trade the 5th one, will you? You'll say, oh, shit, I'm going to have to, something's wrong. I'm going to have to do something about this, right? I'm going to have to wait for this confirmation. I'm going to have to wait for that confirmation. I'm going to have to wait for the next confirmation. You're not going to take the next one. The next one hits a £4,000 winner. And you're going to go, shit, I better put it back on again. You put it back on and the next one loses. And you go, shit, I've just lost $200. And the 2 trades that I haven't traded, I've made $8,000. What is wrong with me? I'm going to trade this consistently. And then he puts a second trade on and that loses $100. And he says, that's me lost 2 in a row. That shouldn't happen. I've lost 2 in a row. Oh shit, I'm going to have to stop trading this. And he stops trading it. Then the next trade comes along and it makes $2,000. And he goes, oh shit, this is terrible. And what's happening is he's just chasing it. You've got to know what an expectancy is, guys. And you've got to have a bank that allows you to trade that expectancy. I don't expect to win a 70 to 1 shot. I am expecting to lose the 70 to 1 shot. I expect to lose every trade that I'm trading, because if I don't expect to lose it, I would never take the deal. If I don't allow myself to lose the next trade, I would never take it, because I'm purely just gambling at that stage. Just purely gambling. You've got to know these things. You've got to look at it and say, I know what I know. I know how to deal with this. So when I'm looking at a probability distribution, I am always asking that question, what am I looking for? We just had a big value opportunity to sell. We just had a big value opportunity to sell the oil, and I don't know if anybody decided to take it. But if you decided not to take it, then you're going to look at it and say, why? What am I doing wrong here? Because what's happened to that big sell in oil? What happened to it? Well, you can see the big sell in oil there, right? You see the big value there, right? And now you look at that big value and say, right, I'm going to sell this because obviously you got a manipulation into that price and you sold it. So that's good news. You've got a great value to sell it. You sold it. And what happened? You got a failed auction and you go, shit, that's rubbish. That trade doesn't make me any money. I've ended up scratching out. So what did you do about it? You've still got a lot of sell value. So what are you going to do about it? You're going to sell it again, aren't you? You're going to come back in and say, right, I'm going to try it again in that same area. I'm going to try it when they manipulate the price through the top edge. I'm going to try the short oil trade again. They manipulate the price into the top edge. You sell oil again, and all of a sudden you go from 20s and it's just traded 60 for $600 profit. So the first sale, you looked at the algorithm and says, I've got a brilliant sale. And then you scratched out and you says, oh, that's shit. Something's wrong. I don't know what's wrong, but I've just scratched out in that trade. Yeah, and what? So you scratched out. So what are you going to do about it? Nothing. There's nothing to do about it. You're just going to trade it again. It's like this trade here. When I bought oil here, it made me nothing. Does it mean I run away and I cry? I'll go into a safe space? Or do I wait for my next opportunity, link that to a sell-side liquidity? When the price drops down, I buy it, and then boom, I now made my money again this time, right? So I've basically had 2 winning trades and 2 scratches. I'm hitting a 50% win rate, if you like. 50% win rate. Do I care? Well, that buy trade was from 80 to a high price of 10s. That was $500. And that's just had a $600 there. So that's an $1,100 profit on 4 trades. $1,100 on 4 trades. 2 scratches and 2 big winners. 2 scratches and 2 big winners. $1,100. So when you understand that these are scratch trades and you scratch out and you scratch out and you scratch out, you start to recognize that that is part and parcel of your trade scenario. You just get on with it. It's part and parcel of your trade scenario. It's part and parcel of the overall underlying trade narrative. And why did you take profits in here? Why did you take profits in this area here? Well, because we saw that this area here, if your charts are up to date, is a commercial buy zone. What do we mean it's a commercial buy zone? Well, if you'd been doing your charting properly, you would have noticed there was a massive imbalance here. Because there's a massive imbalance here, you would have drawn on your screens a commercial buy zone from that imbalance, right? So there's your commercial buy zone. If your charts are up to date, that buy zone should be on your chart, shouldn't it? And if that's where the chart should be on, if that's where the line should be on your charts, that is into a commercial buy zone. So you're going to use that as a profit take location. You're going to say to yourself, give me some of my monies. You're going to watch for a lean, a big volume, and you're going to be trailing it down with a buy stop order to close your short sell positions. And as you close out your short sell positions, you close them out, you bag and tag your monies. Well, that's obviously where you've just made the profit on that swing. So if you get a sell trade and it scratches, it doesn't mean it's the end of the trade. No, on the contrary, the trade might just be getting started. And if the trade is just getting started, you've got to stay consistent with the process. You've heard Kim mentioning it billions of times. Stay consistent with the process. You'll hear sports people talking about it all the time. Stay consistent with the process. You'll hear professional traders talking about it all the time. Stay consistent with your process. Know what your risk reward is. Know what your expectancy is. Recognize that there is not an expectancy to win every trade. Adjust your account sizing to your expectancy and then trade for your expectancy. Reeve is looking at that trade there, and as I mentioned, there's two brilliant potential locations, but you can guarantee if Reeve sold that price, he wasn't still in the short when it came back up here. He's taken some money here, he's maybe added here, he's maybe taken some money here, he's maybe added here, he's maybe taken some money here, he's maybe added here. If he's only been short, there's possibly another 10 trades during that phase there that he could have added to and taken off, right? So long as Reeve is sticking to his process, it doesn't actually make any difference how many trades he added to and how many trades he took out, how many trades he scratched and how many trades he didn't scratch. The point is that the net effect of all of that stuff that went on was a 10 lot sitting at that price that's now collapsed the value narrative. And he's made himself a very nice profit for the day. Enough to pay off his previous 2 wives for the last week. So he's been able to pay his maintenance this week. Good. It's an important thing. So when you see how good these types of trades are, guys, you just got to take the deal, right? You got to take the deal. Sticking to your process is the way you make success. Sticking to your process is the way you find the trades that we've been talking about. Sticking to the process that we teach is the way you found those sell opportunities in the last 3 days in terms of the S&P or the NASDAQ, right? Sticking to the process, sell side, sticking to the process, sell side, sticking to the process. I'm not saying that that's going to be the big winner or that that's going to be the big winner or that there was going to be the big winner. No, we're not saying that. What we're saying is you've still got to take the trade. You don't know which one's going to be the big winner, Alan. You don't know. Nobody does. So stop thinking you do know. Stop thinking you know which one's going to be the big winner. Nobody knows. It's just going to happen. It's going to happen when it happens. And the only time it happens is when you are in the trade, right? You can't make a big winner if you're not in the deal. Reeve can't make a 10 lot if he's not in a 10 lot. He can't hit that home run if he's not in it. So he believes in his process and he's staying true to his process, not my process, but his process. Sammy's staying true to his process. If you stay true to your process, it doesn't guarantee that you're going to make a profit on every trade. It just tells you that's my process and I know it's positive expectancy. I know how much I can trade with. And if my process sticks, I am going to hit a home run every now and then. Maybe once, maybe twice, maybe 3 times a month, I'm going to hit a home run. That means that on 20 different days, you might not hit a home run. You might make a 500 here or a $200 loss there or a $300 win there or a $500 win there or a scratch trade there and another scratch trade there. But 1 in every 5 days, maybe a home run shows up. Once or twice, 3 times in a month, maybe a home run shows up. If you're not in it when the home run shows up, you're going to be absolutely raging. Your psyche is going to be all back to front. You're going to be raging because you missed it. Now you're going to start stretching your ideas just to try and catch the next home run. And that's the biggest mistake you can ever make, is now you're taking stupid trades with stupid prices because you don't want to miss the next home run. The way to guarantee that you don't miss the next home run is to stick to your process. If your process shows home runs on a relatively regular basis, 1 in every 5, 1 in every 10 trades, all you have to do is stick to your process and it will show up. It might not be in 10, it might be after 15, it might be after 20 trades, a home run shows up. You don't just give up on it because it's not in the next trade. You keep plugging away. Once you've proven to yourself that your process works, it's probably the most important thing for retail traders to get their head around. And then when you get a home run, what have you got to do, Reeve? What's Reeve not done that is good? What's Reeve not done which is making it better? He's not hit that exit button, right? He's believed in his process. He's recognized that the value is still in the trade, right? He's recognized that the value is still available for that trade to work for him. And because he's recognized the value is still available to work for him, he's decided to let it ride. You can't have a home run if you always have plus ones. Always. You'll never have a home run. You'll never make the big winning swing. So have belief in what you're seeing. Have belief. And that's what I like about Reeve. That's what I like about Sammy. Is the fact that I'll say that I'm maybe long bonds and it doesn't change Reeve's mind. It doesn't change Reeves' mind at all. He says, and what? You might be long bonds, but your time frame is different from mine. Your time frame is the next 5 minutes. My time frame is the next hour, 2 hours, 3 hours. My time frame is the daily chart. So the fact that I'm long and Reeves short, well, and what? Doesn't mean that you should be long. And it doesn't impact on Reeves' decision making. So when I'm saying that I'm long oil and Sammy says that he's short oil, Sammy's trading momentum and I'm trading a commercial buy zone. So Sammy's short momentum and I'm commercially buying a bottom edge. It doesn't change Sammy's mind about the trade. He might note that that's the case and say, I'm going to take some profits and add back in at a higher price. That might be a thing. But he's not going to suddenly bail on the deal just because I'm long. He's going to note it. He's going to note if any kind of big absorption start to show up, and he's going to think about if any value reappears, then absolutely. But he's got trust in his own process, not in anybody else's, because you've got to have your own process. If it's not your own process, you're not going to have the trust in it because it's not yours. And therefore, you're always going to have the ability to blame other things and other people. You're always going to have that lack of ownership. And it's that lack of ownership that means you're allowed to say whatever you like to say, right? Because you're not taking ownership of the fact that you decided to do the trade. It wasn't you that decided to do the trade. It was the system that decided to do the trade. So you're passing off the buck. And because it was a system, well, the system's not very good. I'm not going to do the trade next. And that's it. The trade's finished. Well, that's why you don't make the big bucks. Have a think about it.